One would think that mortgage rates would go down after the Fed cut the Fed funds rate. But guess what, people? The Fed funds rate and mortgage rates are not the same. And the reason why mortgage rates went up yesterday when the Fed announced their 25 basis point cut, well, it's because of this.
A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1.
Fed Chair Powell's remarks after making the Fed funds rate cut really put a damper on mortgage rates. Interest rates actually shot back up above 6%, and that's where we are as we end the week. Matter of fact, Fed Chair Powell, you get no candy for Halloween. You get stale old candy corn. All right, now let's get into the rest of the news about the housing market. We'll stick with the big three. Prices are steady. Inventory is actually up right now, and you can see that big red arrow up. Interest rates are up right now. They are back above 6%. And what's the headline news? So the headline news really taking center stage was the Fed rate cut on Wednesday. But mortgage rates, obviously they went up. And again, Fed Chair Powell gets no candy for Halloween. And hey, those members of Congress, the senators who are not allowing our government to open, they don't deserve a paycheck. They deserve a big stinking pile of dookie. That's what they deserve. All right, we'll get into why the government shutdown is really going to have a negative impact on December's potential rate cut. Pending home sales are steady. Home prices are up. What? That's right, home prices are up. And we'll talk about VA rates. VA rates are now back above 6%. All right, so let's talk about the headline news. Fed cuts the rates as expected. There is 100% unanimous amongst economists that the Fed was going to cut the Fed funds rate, and they did by 25 basis points. There were two who dissented on the board, and one actually wanted a 50 basis point cut, and that's the one that President Trump just nominated not too long ago, Mr. Murrin, and then Schmidt wanted no cuts at all. So really, this is the second time this year, since September, October, we've had a 25 basis point cut. December, again, as the video pointed out, Fed Chair Powell said that December 10th is not a foregone conclusion, and a matter of fact, far from it. And one of the bigger things they announced, though, and we knew this was going to happen, we just didn't know when, but after 3+ years of quantitative tightening, basically not reinvesting in mortgage-backed securities and treasuries, and just letting those run off the balance sheet when they mature, they have said that they are going to start buying treasuries again. Not the long-term ones, which we need, but the short-term treasuries. So that was a bit of good news, as the Fed will start reinvesting their funds when they mature. Now, again, Powell is not committed to a cut in December, and we're going to talk about why. And you know what? To his credit, there is some reason why. While we all think of this as a slap in the face to President Trump and his administration, this could also be a slap in the face or a boot up the ass of the Senate of Congress to do their job. Let's break that down. Now, as we know, the Fed, they have a dual mandate. It's employment, maximize employment, and minimize inflation. Their goal on inflation is 2%. We're at around 3%. 2%, that's a random number. It's an arbitrary. It was a number picked by Fed Chair Greenspan several years ago, more than several years ago now. And that's been their marker. Before COVID, we were right around 2%. We've been trying to get back down there, but we're in a good position right now. The impact of tariffs really hasn't been that bad. Now, let's talk about that other part of their mandate, unemployment. With the government being shut down, we do not see the Bureau of Labor Statistics jobs report. We don't see the Department of Labor, their unemployment reports that come out every week. We're not getting any of that, so we really don't know, with the exception of the ADP private sector job report. We don't know what unemployment is looking like. But I tell you what, if you watch the news, and I certainly watch the news, you will know that companies are laying off people. Blame AI, blame downsize. I think I've seen it a couple times where people talk about the impact of AI is much like the impact of tractors and of machinery on agriculture that we had at the turn of the century from the 1800s to the 1900s, as we got more machinery to take the place of farm animals and human labor. But let's take a look at who is laying off. Some of the recent announcements on layoffs. Amazon just announced that they're laying off 14,000 employees in corporate, and they're going to go push a focus on AI. UPS, United Parcel Service, 48,000 people being laid off in operations and management. That sounds like streamlining. That sounds like utilizing AI. You have Charter Communications cutting 1,200. Paramount, Skydance with their merger, they're cutting 1,000 people. Novo Nordisk, they're the weight loss drug, one of the major weight loss drug companies. Global, 9,000 employees being laid off. Target, 1,000. Microsoft, 9,000. USPS, United States Postal Service, 10,000. Basically doing voluntary retirements. ConocoPhillips laying 3,000 off, and Hewlett Packard, 1,000 to 2,000. Folks, we don't see the reports right now, and some of these we will not see for a while, but the labor force is shrinking, or certainly the employed labor force is shrinking. We just don't see it because the government is shut down. Let's talk about the Case-Shiller Home Price Index. This is the gold standard for home price appreciation, and for the first time in 4 months, we actually saw home prices appreciate. Not a lot, but 0.2%. Now, why is that? Well, that's because this is for August, and this is right when we started to see interest rates come down. And we're up 1.5% year over year, so just home prices a little better than they were a year ago. And that really just shows a positive impact of interest rates starting to come down. It's not that there's not a demand for housing, it's that there is a demand for affordable housing, and we don't see affordable housing until we get rates down. We will not see that. And we'll see, I think we'll see positive for the month of September. We'll see positive for the month of October. I know in my own personal business, the last several months, actually the last 3 to 4 months have been very positive as we've seen interest rates come down. ARM rates have been super good for clients. I just had somebody at 4.25 on a 5-1 ARM. They were using some credits, but still, that's pretty freaking solid. All right, now let's look at pending home sales. Again, another benefactor of lower mortgage rates. We're steady month over month. That shows really 2 months, August and September, where you saw interest rates come down and you saw buyers get back into the market. Pace of sales actually up from 4 million to 4.06 million year over year, which is good news. Not where we need, not where we want to be at 5 million, but still very good news. And again, lower home sales kept our sales index from at 74.8 2 months in a row, so that's positive for home buyers. That's positive for home sellers as well. All right, and now let's look at VA rates. This isn't good news, folks. You can see that big spike. That spike occurred on Wednesday. Interest rates had been going down since the beginning of October in anticipation of the Fed cutting the Fed funds rate, and they did. But again, Fed Chair Powell saying he is not committing to a December rate cut. That's the number one reason why interest rates went up this past 2 days. So I expect that they will come down. We will get the ADP jobs report come out next week. If the government goes back to work, that'll be positive as well. But again, sometimes we have this overreaction to the news, and we had, I think, a bit of overreaction to Fed Chair Powell's announcement after the Fed made their decision. So what does this mean for buyers and sellers? Well, let's take a look at buyers. Hey, buyers, you now have more choices and less competition than earlier in the year, making it particularly favorable for negotiations. Motivated sellers are increasingly open to price reductions or concessions to close deals before the year end. They have that year end. That is their goal, to sell their home by the end of the year. And guess what? They're going to incentivize you to do that, buyers. Home prices are largely flat, with mortgage rates dipping below their summer peak. So those who secure financing now, they're going to get the extra incentive. Again, if you can get enough credits, you can get a rate into the low 4s. Maybe it's for 5 years. Well, 5 years is a pretty good amount of time, considering most people sell their home within 4 to 6 years. So really a good opportunity for buyers, and we could see that in the increase in mortgage applications. We had a 5% increase week over week in mortgage applications for purchases and 9% for refinances. an increase there over the last week. So people are coming off the sidelines, and I can tell you right now, in certain parts of Oahu, it is competitive. We just had to have an appraisal clause on an offer in Kailua. And I had another client who actually lost out to an all-cash offer on a $1.3 million home. You know what? If the home is right and it's in the right area, we talk about this location. If you're in the right area and you price it right, you're going to sell your home. And as we go, inventory is on the highest it has been in 10 years in Oahu. Again, most of it is focused on the west side of Oahu, but still a home in paradise. I have people out who visit me in Ewa Beach and Kapolei. When they leave, they're like, this is the first vacation we have ever had where we don't want to leave. And you know what? I said that now for 16 years. I've said that now for 16 years. I didn't think I'd be here forever, but I think I'm going to stay for a very long time. All right, sellers should be prepared. You should be prepared to compete on price and terms as inventory levels remain higher. And buyers are taking their time. But well presented, accurately priced. I'm telling you, staging makes such a big difference. I know some great realtors who are getting their homes staged, and you know what? That makes a huge difference because their homes are selling quicker. And it doesn't matter. They could be on the west side, but if it's staged right, if it's priced right, you're gonna sell. But if you put that price over what the market is showing, it's not going to sell. It's not going to sell. You got to price smart. And then also skimping on necessary repairs. In a previous market before 2022, you didn't have to fix anything because they wanted a home and they saw those great rates. Well, guess what? You're going to need to make those repairs now in many cases. But that's also where having a good realtor on your side to help you determine, what do I repair? What do I put off? What do I maybe give as a credit? So given this increased inventory and the slower sales volume, offering concessions such as paying closing costs or crediting repairs can help secure committed buyers faster, particularly as many seek to move before the end of the year. Because just like sellers want to sell by the end of the year, people who are moving want to buy by the end of the year as well. All right, that's all I got for you guys. Have a great week. Aloha.